Morning, guys. It's Tuesday, August 19th, 5:25 a.m. Central Time. Grain markets are mixed this morning. December corn futures down 3 cents at 403 and a half. November soybeans up a half cent at 1041 and 3/4. December Chicago wheat down 2 at 523. December Kansas City wheat down 4 1/4 at 524. December spring wheat up 1 1/4 at 587 and a half. Pro Farmer kicked off its annual Midwest crop tour yesterday, and we've got results from a couple of different states. Why don't we start there?
Yep. So we got results from South Dakota and Ohio yesterday. Scouts estimated South Dakota's corn yield at 174.2 bushels per acre, up 11% from last year and 21% above the 3-year crop tour average. Soybean pod counts in the state were up 16% versus last year. Over in Ohio, corn yields were pegged at 185.7 bushels per acre, topping the previous record of 185.1 set back in 2021. The estimate is 1.3% higher than last year and 2.9% above the 3-year crop tour average. Soybean pod counts in Ohio were up 4.7% compared to last year.
Before I get into the commentary, let's talk about the tour very briefly. Some people like the tour and some people do not like the tour. We are talking about the tour because it is newsworthy. This is something that a lot of traders and farmers and agronomists and people are watching. And we, of course, are trying to answer the question, is USDA correct with these monster yield and crop estimates? And I think that the tour at the core of it helps us to reach those answers. Are they always correct? No. Does it give us kind of a lay of the land, boots on the ground type view? Yes. To be clear, we have no affiliation with Pro Farmer or Farm Journal. That being said, the Farm Journal group has been very good to me personally over the years. They put me on TV when I was like 23 years old and I didn't know a damn thing. And they still put me on TV at 41 years old and I still don't know a damn thing. But in any case, so I do owe a debt of gratitude to them. So if you hate the tour and you hate me because I like the Farm Journal people, that's cool, whatever. Okay, let's get into the numbers. There was a lot of variability with the Ohio corn crop, the way that it appeared. A lot of the crop in Ohio was planted either early or late, and therefore there was variability. Pro Farmer estimates that the Ohio corn yield will rise 2.4 bushels per acre or 1.3% versus last year. That's tour versus tour. So they're not looking for much of an increase. USDA, however, is looking for this massive increase. They're talking a rise of 19 bushels per acre or 10.7% versus last year. That's USDA versus USDA. So the tour data is clearly much less optimistic about the state's corn yield prospects when compared to recent USDA data. And I think that the farmers in Ohio have been talking about this for a long time, like especially since that report was out last week. They're like, this USDA yield number just is not reality. And I think that Pro Farmer is telling you that to some extent. Now, soybeans in Ohio are a little bit different story. The pod counts were really good, up almost 5% versus last year, above the 3-year tour average. So I don't really have anything bad to say there. South Dakota is a superstar. The crop's going to be a banger in South Dakota. Pro Farmer estimates that the South Dakota corn yield will rise 17.7 bushels per acre or 11.3% versus last year. That's tour versus tour. USDA, meanwhile, has estimated that the state's yield is going to rise by only 4 bushels per acre or 2.4%. That's USDA versus USDA. But to be clear, USDA is projecting a state record corn yield in South Dakota, 168 bushels per acre. Some people think they may even be too low with that number. The precipitation was fantastic. Everything in South Dakota looks pretty darn good the way that it looks. South Dakota soybeans, very similar. It's going to be a very good crop, if not a record crop. So long story short, looking at the tour stuff this morning, I think Ohio has some question marks. And I think people are going to look to that and say, wait a minute, USDA might be a little high, especially with the corn number. They might say the contrary about South Dakota and say USDA is a little bit too low here. Does the market care about this morning? No, it doesn't appear that way. And in my experience, the market does not care about the tour, not in most years. I talked about that in yesterday's premium video, and we actually had some some price action data as it relates to tour week. I'll talk about that video here in a second.
Brazil's second corn harvest is nearly complete. According to well-followed private group Ag Rural, 94% of the crop was harvested as of last Thursday, up from 88% the prior week. At the same time last year, harvest was already completed. Last week, CONAB raised its estimate for this season's total corn crop to 137 million metric tons, while USDA held its projection steady at 132. Ag Rural also reported that planting for Brazil's 25-26 corn crop is underway, with 1.6% complete compared to just 0.1% at this time last year.
Okay, so the fact that Brazil's wrapping up corn harvest is not necessarily super newsworthy. Here's what's newsworthy. Despite what appears to be a monster crop in Brazil, Brazilian corn remains non-competitive versus U.S. corn on the export market. Reuters data this morning for spot delivery says that U.S. corn is cheaper to the tune of $13 per ton, or about 33 cents per bushel, which doesn't make a whole hell of a lot of sense, given that this crop is supposedly a monster. We saw the CONAM number at 137, and some people think it's much higher than that. Some people think it's every bit of 140 or 145. That's what Pete Meyer has told me, and many other people have told me. There's two narratives here, I think, that are playing out. One is that the Brazilian corn grower is losing money. This crop is a loser from a financial standpoint, and they are holding and hoping. They're not selling the bushels, and for that reason, the prices and the basis versus Chicago Board of Trade has stayed slightly elevated. That's one narrative. The other one is that they're using a lot more corn domestically for ethanol in particular. I pulled the chart this morning. Here's Brazil corn domestic use as a percent of production. So they're going to use a ballpark based on USDA statistics in the forthcoming marketing year. 71% of their corn, or 72%, will be used domestically, and the rest of it will be exported. And that's not like a super high number historically. It's the highest in 4 or 5 years, but it's not like it's going straight to the moon. Now, I did run a separate set of data. I don't have a chart for it, but I did food, seed, and industrial use as a percentage of production, and that number is ticking higher. So maybe the increased ethanol production in Brazil has something to do with this, but I think more of it has to do with the farmer just holding on to corn. They were able to use cash and not necessarily profits, but cash from the soybean crop to kind of float the cash flow boat here for a little while. So, I mean, this is all good news for the U.S. farmer. Our corn is competitive. We're doing a ton of export business, and that's good because we thought that this was going to be the other way around, and we thought that Brazil would be much cheaper at this point in time.
The USDA will no longer support wind and solar projects on farmland. In a post on X, USDA Secretary Brooke Rollins said that such projects threaten the next generation's ability to farm and put the nation's future at risk. The decision marks the latest effort by the Trump administration to roll back wind and solar energy development. Until now, USDA projects have directed billions of dollars toward renewable energy projects, such as wind and solar. According to the agency, as of 2020, only 0.5% of U.S. farmland was used for wind turbines and solar farms, and the majority of that land remained in production.
This is tricky. This is a tricky thing. So there's something called the REAP program, Rural Energy for America program, and they offer grants that cover up to 50% of total eligible project costs, guaranteed loans up to 75%, all sorts of money. And USDA wants to get rid of this. There are two different schools of thought here, I think, when it comes to this. Brooke Rollins and USDA think that they're doing the farmer a favor and that they're being pro-agriculture by saying, hey, let's not put this stuff on productive farm ground. And I understand that argument. At the same time, if I'm the landowner, do I want USDA necessarily telling me what I can do with my land? It's not that they're telling you, it's just that they're saying, hey, we're not going to provide funding for this anymore. And I don't know if it makes sense to do the funding, but I'll tell you this, there's a lot of solar panels that have gone up on productive farm ground in the Central Corn Belt, and the amount of money that these solar companies are paying versus cash rent is like astronomical. Like they're paying 10, 15, 20 times cash rent on long-term leases. I wonder what the future of that is going to be. It's not that they're saying you can't do it. It's that they're saying, we're going to cut the funding, and that's going to result in less of this. I still don't know exactly what the details are. This is a Twitter post. I don't think that they've signed anything into law yet, but interesting stuff.
If you guys have not checked out our premium content, you sure need to do so. Joe, can you tell our viewers about some of our recent premium videos?
So the crop tour will be the big news this week, barring, big news could always pop up, but I did a crop tour primer yesterday. I talked about price action during crop tour week. I talked about the differences between USDA and the tour and how Pro Farmer has performed over the years. I had a handful of very useful graphics that you guys can kind of keep on your desk and reference when the tour numbers approach. Last week, I did a corn and soybean marketing update. What's the game plan? I went through every sale that I've advised for new crop corn and soybeans and talked about what my game plan is moving forward. These are obviously very difficult times. There's no profitability associated with current prices, but you got to start somewhere. And we do have some sales on the books that we've advised over the last, oh gosh, I think our first sale was more than a year ago. But in any case, I talked about the plan moving forward. Everything that I do is super simple to follow. It's just cash grain marketing recommendations. I'll tell you what I advised. I'll tell you what the corresponding futures price was. I'll tell you the date that I did it, the percentage, and we spit out a weighted average, what we've got sold, what we've got unsold, in a spreadsheet. Super simple to follow. I think that the grain marketing industry, the industry in which I work, has overcomplicated all of this, and that you should seek to simplify it. And that's what I try to achieve through these videos and through my marketing recommendations. If you guys want to see the premium stuff, go to standardgrain.com. You can sign up this morning. This is a $50 per month subscription. You can cancel at any time. There's no other fee, no other obligation. Nobody tried to sell you anything else. This is just a bunch of content from us every single day. We don't want to talk to you. We don't want to do your brokerage. We don't want to sell you crop insurance. We've never raised prices ever. So as I mentioned in the past, the big ag companies to which you have pledged your undying loyalty price gouge you to death on everything that you buy, but we don't. So you should support the little guy for once. We're independent. We don't have any financial backing of any sort other than the farmers and ranchers and industry people that support us and pay for the subscription. So give that deal a shot this morning, guys.
U.S. corn conditions edged slightly lower last week. As of Sunday, 71% of the crop was rated good to excellent nationally, down from 72% the prior week, but well above the 5-year average of 62%. The rating was the second highest for the week in the last 10 years, trailing only 2016. USDA estimates that 3% of the crop is mature nationally versus 4% last year and 3% on average. Soybean conditions held steady at 68% good to excellent, also well above the 5-year average of 62%. The USDA estimates that 82% of the crop is setting pods versus 71% last week and 82% on average.
Corn conditions still the second best of the last 10 years. Anybody who's looking at the ratings and drawing a conclusion regarding final yield based on ratings is going to tell you, yes, USDA is probably in the ballpark with this 188.8. Maybe it's a little too high, maybe it's a little too low, but they're probably close based on the trends and the percentages above trends associated with years like this. Soybeans, you're going to start to see similar conversations. I haven't run the numbers in terms of exactly what percentage above trend we should be, but we'll probably be above trend, at least based on this in a vacuum. And no, the soybean crop is not made. It's August 19th. We've got some time to go. And there have been some weather problems that I discussed yesterday, the dryness in Illinois and Indiana, Ohio, Michigan, places like that. There are absolutely some issues out there. Let's talk about wheat real quick.
U.S. spring wheat conditions improved for the second consecutive week last week. As of Sunday, 50% of the crop was rated good to excellent nationally, up from last week's rating of 49%, but below the 5-year average of 63%. The crop is 36% harvested compared to 16% last week and 36% on average. Meanwhile, the U.S. winter wheat harvest is nearly complete, with 94% of the crop harvested nationwide through Sunday versus 90% the prior week and 95% on average.
Spring wheat ratings don't really matter anymore. It's more about harvest pays, which is fine. My hope for wheat in the wheat market, it's been posting fresh lows on and off every day for the last couple of weeks, the way that it feels. And that's, it's been like every other day, a fresh life of contract low. My hope is that, we're already down in the dumps here, that maybe when you get toward the tail end of harvest, unfortunately, maybe the farmers got to sell some of this stuff. Maybe it's spring wheat now. Maybe it's still some winter wheat. And maybe that's how you bottom this thing. Demand has been very good. Export demand has been fantastic. We got the best book of export sales of the last 10 years. The USDA data would still tell you that we're oversupplied, but the wheat market can change quickly.
Russian consulting firm ICAR has raised its forecast for the country's wheat crop to 85.5 million metric tons, up from 84.5 million metric tons, marking its second upward revision this month. The increase reflects improved yields across numerous regions. ICAR also raised its wheat export outlook to 42.5 million metric tons, up from 41.5. According to Russia's Ministry of Agriculture, nearly half of all growing regions have been harvested so far, with yields exceeding last year's levels.
This is a non-helpful headline if you're a wheat bull. Larger production and larger exports out of the country that exports the most wheat. So no, not positive.
U.S. corn shipments were near the lower end of pre-report expectations last week. USDA reported that 41 million bushels of corn were inspected for export during the week ending August 14th. The print was down 31% compared to the previous week and down 14% versus the same week last year. Soybean shipments were reported at 17 million bushels. The print was down 13% compared to the prior week, but up 17% versus the same week last year. Wheat shipments were near the lower end of expectations at 15 million bushels. The print was down 4.7% versus the previous week, but up 5.6% compared to the same week last year.
First time in a while, I'll say that the corn shipment print was a little lower than I'd like to see it, but we've been so fantastic like every other week. I'm not going to worry about 1 week in a vacuum. Soybean shipments have been decent seasonally, and wheat looks just fine also.
We had a flash sale of corn yesterday. U.S. exporters sold 5 million bushels of corn to unknown destinations for delivery during the 25-26 marketing year. Accumulated corn sales for the next marketing year remain strong, up 108% versus the same period last year.
Yep, and we need all of the demand that we can get, and a lot of it's going to have to come from exports. You know, the other two big demand categories for corn, your ethanol category and also your feed and residual category, they're kind of capped. Like we have limited capacity to increase those things. Exports can increase by as much as they want to increase by, and that's where we're going to have to find the demand. Where you could run into a problem here in the corn market is if this demand continues and we end up with, you know, we're already the second best book of new crop exports the last 10 years. If you end up like at the best, and then, you know, here in the next couple months, we decide, or USDA decides, or just in general, we find out that the crop's not as good as advertised, that's when you could run into a situation where things get really tight really fast. But we're not quite there yet, because I think the majority consensus opinion is that this U.S. corn crop is a monster. What did cattle do yesterday?
Cattle futures climbed to new all-time highs yesterday. Live cattle were 47 cents to $2.07 higher. Feeders saw gains ranging from 275 all the way up to 530. Box beef was sharply higher yesterday. Choice was up 367 at 404.24, setting a new high, barring the highs that we saw during COVID. And select was up a whopping $6.38 at 377.14.
Very impressive. Stock market's off just a little bit this morning. Treasuries are up just a little bit. US dollars off. Crude's down 75 cents. Gold's up $10. Have a great day today, guys. We'll be back on Wednesday.